relationship between small businesses and entrepreneurship. Although today, entrepreneurship has been widened to include large organizations in both the public and the private sector, the main focus is on the creation of a new enterprise. In a small firm, only one person or a small group of people are in control, and it is this role that is defined as entrepreneurship. There is some discussion as to whether lifestyle entrepreneurs, i.e., those who only want to create an income for themselves, are entrepreneurial. Drucker drew the distinction between small business and entrepreneurship and said that not all small businesses could be considered entrepreneurial. He acknowledged that someone opening a new business, such as a restaurant, is taking a risk, but they are not creating something new, whereas McDonald's created a new method of delivery and a new market. Entrepreneurial activities. Arbitrage. Buying goods at one price and selling at another with the intention of making a profit on the exchange. Opportunities. Alertness to ideas and opportunities. Innovation. Developing new products and services as well as new markets and new ways of production. Raising finance/capitalist. Investing own money as well as raising external finance. New business. Starting and growing a new business and creating new jobs. Risk and uncertainty. Bearing the risk and uncertainty of failure. Forecasting demand. Ability to foresee and create demand for products and services. Leadership. Having a vision and be able to motivate and inspire people. Management. Organizing the factors of production and the resources needed. Creativity. Can create something out of nothing. Control. Control over one's actions and time. Vision. Having a long-term vision for the business. Independence. Independent decision-making. Proactivity. Initiating action and pursuing a strategic vision. Persistence. Carrying on despite setbacks and failure. Profit. Profit is the reward for the risks taken. The meaning has developed over the years. The word entrepreneur comes from the French and literally translated means take between. This is the original concept of the entrepreneur, as one who buys at one price and sells at another and makes a profit on the exchange. However, the entrepreneur will not necessarily make a profit every time, and therefore there is an element of risk in each transaction. However, there has been some consensus of what entrepreneurship entails. Entrepreneurship and economic growth. One of the reasons for looking at entrepreneurship is the contribution to economic development. These include the creation of new jobs, innovation in developing new or improved products and services, and new markets. Governments target the small business sector in the hope that they can reduce unemployment. From the economics perspective, there is equilibrium when supply equals demand at a particular price, and markets are based on this premise. This leaves little room for entrepreneurship and small businesses, as the market would be dominated by large firms, which are more efficient. Economists see entrepreneurship as a response to the inefficiencies of the large firms and the entrepreneur as the coordinator of production. Over the centuries, entrepreneurship has thrived in different parts of the world and at different times. Merchants who crossed the oceans in search of commercial exchange were responsible for building empires and developing regions. Cities were built around the important ports, and these traders were richly rewarded for the risks. Parts of the world developed at different times, and from the 17th to the 20th century, it was the growth of the cities that provided opportunities for growth. The Low Countries in the 17th century focused on international trade and art. Britain in the 18th